Hey, good afternoon, everybody. Today, we're going to be going over something pretty simple. I'm going to basically show you how to make a living day trading. Just simple, just like that. Actually, if you have the right strategies and you have the right tools, it can be that easy. And that's what I'm going to try to go over today, starting from the beginning about just looking how simple day trading can be so you just don't get all bogged down with all the confusing aspects of it. So I'm going to start right from the very beginning of what a strategy is. Now, if you need video, by the way, I'm the professor on Day Trading for Success, and I'm a former math teacher, and I do a lot of live trading demonstrations. So if you're looking for live trading, just look at some of the earlier videos. There's tons of them, hundreds of them, and just peruse through the library here. This isn't going to be a video about showing you how to set up charts and how to do about indicators and about scanners and all that, although you'll probably see a lot of that here. I have videos for all that stuff, so you can just find all those different videos there, as well as free custom indicators that you can download for free or upload. And then I have free layouts all over the place that usually, if you just look under the information, it'll show a link for the layout. And make sure you watch those videos about how to load in the layouts and how to load in the free custom scripts, because they're not intuitive. It will, you'll want to click the link and that won't work. You have to copy it and then push Control V to get it in. And there's a couple videos on how to do it, and there's a really good one over at the $1 Million Margin Club. That's $1,000,000-Margin Club, and they buy a lot of my custom indicators that aren't here for free, and you can get them over there. And they have a lot of good content because they're a book review YouTube channel, and I trade with a lot of the $1 Million Margin Club members. Please read this disclaimer. I'm not a licensed financial advisor, so if you should follow the advice of someone licensed before you try to follow anything that I'm showing you here today. So this is primarily an entertainment channel. Let me get this. There we go. So today I'm going to literally show you from the beginning what I do in the morning, how I find the stocks that I'm going to get to trade. So, and then I'm going to go over one of the two of the simplest strategies, mostly one, which is support and resistance in historical data strategy that you can set up from the beginning every day in just a matter of minutes, and then help you figure out which way the stock's going to go. So we're going to start with finding a stock first, my process in the morning of how I do that. And we'll talk about the different strategies I might use for the scanner settings that I, have, and which stocks I go with. Now, I'm going to be showing you primarily large cap strategies, which means a minimum of a $25 billion market cap and 1 billion float. So, but you can apply these strategies to any kind of trading, because it's just the basics, ABCs, that it's kind of hard for you to find online unless you get just the right person on YouTube. But I'm going to try to show you from just the very basics, really all you need to know to start making trades. If you make a trading plan, I'm not going to just talk about trading plans all day long. If you follow your own rules, but you should have a max loss per trade. You should have a max loss per day. Following a trading plan is the hardest thing to do. With any trader will tell you that, and even professional traders to this day, traders that trade at prop firms that trade here, they still occasionally will not follow their plan because they still think they know what's going to happen. And, a lot of times they're right, but, you're taking a chance if you don't follow your plan. So now this layout might look confusing too. I'll just go over it very briefly before we start. This is a 1-minute chart. This is a scalping indicator. Down here is a day chart. I'm working on a couple of new scripts, so you might see some things here that I haven't put out yet. So on this day chart, I have the ATR. I have the this script you can get for free. This has got alarms on it, so I would definitely look for that one. And then I'm working on a new Keltner-Bollinger Band strategy indicator right now that I think is going pretty well, but it's not done yet. But this is a day chart that's minimized because I only bring it up, but I'll show you why I bring it up. And then this is an active trader. This is your level 2. Normally I will hide these exchanges when I'm trading because it will sometimes show my account number. So because it's kind of their own dark pool that Charles Schwab has. This is Think or Swim that we're on when you trade market. It's like their own little dark pool. This is a 15-minute chart. And then I have a 5-minute chart over here. Again, I'm working on different indicator designs right now. I'm right in the middle of it, so you'll see some stuff that I won't fully explain to you, but it will be available fairly soon. This is the MACD, and then on this 5-minute chart, and then I have another 5-minute chart here that's minimized. That I'll show you why I use that, and then these are all minimized 1 hour. 30-minute, 1 hour, and 4 hour, all used to figure out which strategy I'm going to use each morning, and then occasionally used to mark support and resistance levels or historical data. So you don't need to know all that. You don't need to get confused by all these numbers flashing by. You don't need to read these. You don't even need to have this up to trade this strategy. It can just be a bunch of charts. You do need to be able to take trades, but and then you might just want to start with 5 trades or 1 trade, 1 share or 5 shares. So, but let's just go in right away. Where I would start my morning is start with the scanner settings, right? Now I set this a little lower than typically. I'll have that at 500, but you probably shouldn't start that high. I am a large cap trader, but if you were trading the RV strategy, which is, there's a link to that, and I'm going to kind of show you the principles about that. Also the open strategies, there's 4 of them. And that's called Day Trading Volume 1, and I'm going to show you. But why I'm referring to that book is not just that it's a great book that the $1 Million Margin Club puts out, but basically it has the simple strategy that is the kind of the basis and building blocks of every strategy, which is that, but to help you figure out which way the stock's going to go each day. So you can, if you follow the right strategy, you can. It doesn't matter the stock, it doesn't matter the day. You should be able to find opportunities in any single stock if you're going short and long, because you just need to figure out which way is it going to go in that given moment, right? That's the trick. And if you guess wrong, make sure you follow your day trading plan. So we're going to scan right here. Now this has got an ATR of 4. What that means is your average true range, the average true range that a stock moves over a 14-day period. I'll show you that again a little bit more. And I don't want it to be more than less than a $4 range, because I want it to be a stock that can move enough, a large cap that can make us some money. So that's $4. The 14 bars means 14 days, right? So that's set for day over here. So again, there's videos on how to set up your scanners. I'm just kind of showing you how I start without telling you how to do the whole thing. Now I have it set for 10 stocks, and then I would hit scan. Now I already traded NVIDIA today and did quite well. I also traded Tesla that doesn't even come up here and did quite well. So we're going to go to a different stocks today. So, but typically I would look at the highest volume and I'd think about trying to trade that stock for the day. But a lot of times it's just too volatile or too expensive for the group that I trade with, a pretty big group. We just decide that they'll help me decide, like they don't want to do that. So as I go down this list, I want to make sure that the volume doesn't drop too much. But really, for beginners, if you're a beginner, a stable stock that I always can make money on is Apple. Now, if it has this, I have this set up a certain way, the scanner, so it shows me whether it's easy to borrow or hard to borrow. So if it's easy to borrow, that means we can short that stock. And as a day trader, scalper, I like to be able to go up or down at any given moment. So that means being able to short it as well as being able to go long, play it long, or play it like it's going to go down. And you can make money either way. That's when people come up to me all the time that don't know anything about the markets, go, what do you do in a down market? How do you, wow, you just don't trade? It's like, no, I go down and I make money going down because I guess it's going to go down. But if you're new to trading, you don't really understand that concept. It's a basic concept. You can trade it either way. You need to set that up with your broker. Usually that requires a minimum amount in your account. It's the $25,000 pattern day trading rule. So that's the PDT, they call it. And if you have that $25,000, usually you can margin 4 times that amount, $100,000 worth of value in stock. And then it also allows you to go short as well, trading again, like it lets you borrow money on a stock is basically what it's allowing you to do, borrow. So you do like a little credit check and stuff. It's really not that hard. If you have the money, they want you to do it. So, but I would, if you're going to start doing stuff, you know, if you're going to start to day trade, I would try to get 26,000 or 27,000, or you're looking for that perfect trade and you're doing, you know, just like 4 or 5 trades a week or something, and you're looking for the perfect setup to get in and out. And you know, I have videos about that too. It's not going to be, I might cover that a little bit here, but I'm going to cover you more how to set it up and what you're looking for on any given day for any given trade, and how professional traders will use this information to make money. Now, we have many that have gone on to prop firms, many that are made over $1 million since I started the Day Trading for Success channel. But more, what we have here, which was the point of this entire channel, is that you just make $100 a day, $200 a day, maybe $300, $400, $500 a day, enough to make a difference in your life without having to have all that much money or all that much risk, by just following the right strategy and having the right indicators. So I'm going to go to Apple off of the scanner because it's pretty high up still in volume. Now, granted, we're in the middle of the day, but this is what I would look for in the morning, and it would give me enough data to make these same decisions. So now I'm going to go back over to charts up here, and I'm going to put in Apple. So now we're going to Apple. So now again, we're in the middle of the day here. Let me just see. So let me just get this. I'll go over you a little bit about what we got going on here. Now again, I have all kinds of things that tell you how to do charts and stuff. So don't get confused by all this. I'm just trying to get it set up in a way where I can show you things. Okay. So this indicator is probably messing with you. So let me just I should just take that off for now. Sure, if I have that. Yeah, this is the custom one, so let me just get rid of that now. That won't be so messy now. Okay, so what do I do in the morning first thing? Now, the whole idea is, now that I have my stock, now we're in the middle of the day again, so keep in mind that I wouldn't see all this. I would be back at the beginning. This gray means pre-market, like before the market opens. This is the open session that's going on right now, and Apple went up, kind of came back down again, and then went up. Now, these are candlestick patterns that are basically showing you price action going up and down. And here's the price action here on the level 2. So the people will bid a certain amount, but they're asking another amount, so they kind of meet in the middle, and that's the market maker right there. So it's kind of like a little auction going on right there. So it's usually just a penny. On Apple, it's just 1 or 2 cents apart. So safe way to look if you're trading market is like you're probably going to get it for the ask price. Well, it depends on whether you buy or sell. Never mind. Let's not get too confusing for you. So, but anyway, these are people. This is price action from people that are buying shares. These are the shares. You multiply that number by 100, and already you're probably getting confused. But if you're new. But for those of you that are a little bit into it, you know what I'm talking about. But you don't need to know this right now. What we want to do is we want to figure out which way these candlesticks are about to go, right? So there's going to be a huge amount of gap in everything you need to know from what I'm telling you. So this is a cursory, hopefully get to understand kind of the basics of how stocks move. Not what is a stock market, what is a stock, how to open an account, how to do that. Get Day Trading Volume 1. There's a link to it. It has all that, how to open an account and stuff. But so if I looked at a chart, I'm going to end up trading on this 1 minute, buying and selling on this 1 minute. So there's a process I go through because I want to know which way this is going to go. Nobody knows for sure, but they're looking for prior data to try to help them out. So this 5-minute chart is set up to go 10 days back. So we're going to look for, there's the low from 10 days back, and then there is the high. It looks like this is about the same price. So we can use that one about where we're going to drag. So I'm going to start with what they call Fibonacci retracement level. And that's actually, let me pull back here. So that's what they would call nature's mathematical formula. And what that does is, it's going to make me do that weird finger thing. So I'm going to mark it down here. Oops. And then I'm going to try to get this using my wheel on my mouse, get this back to where the high is. So I click the low and I'm stretching it. And I'm thinking that right there is a double tap right there. So now I've stretched it over to a high, and then I left click again, and it opens up all these levels that are a mathematical formula that, you know, a lot of people say that all of nature and the planet and everything is based on. So what does that do? That is creating channels. Now, trading in channels, high and low, ceilings and floors, is a really good way to look at how to figure out where the stock's going to turn around. I've just done one of these right now, and look how accurate it kind of gives you the range of these channels, like where the stock moves in between and it bounces, turns around, you know, like now I marked it here, so I can't count how accurate that is. Look at that. But it did it again right here and then bounced down. Look at how it stayed along here. So that would be the first thing I would do, is I would try to figure out where here comes the studio cat's going to walk by. This is a studio where we do trading in. Hello, Shiitake. Yes, you're rubbing my microphone. I see you rubbing my microphone. Everybody sees you now. You're amazing. So you need to go find a place to sleep it off, whatever just happened. Yeah, go ahead, walk by. Nothing's scaring you here. I want to have some more coffee. So she's decided to crouch down right in front of my chart. So you have to move along. We have to move along. This is a very, very important video. Oh, you're going to flop down on top of my keyboard. Okay. That is her obeying me. So anyway, we've made and she may interrupt us a few other times, but it always means good luck for us traders to trade. We know when we see the cat walk in front of the screen that it's good luck. So this is how I would start. Now, don't pay attention to this MACD down. This is just another indicator that helps you decide, and we'll go over some of that stuff today. So this is our starting point to see, hey, if I took a trade here, where should I get out? Maybe when it gets near this line, right? So when it comes back down, when should I turn around and get out? Oh, maybe when it's here and then go back the other way. Maybe I'll do it again and go back the other way. Maybe, you know, so just the first inkling, right? And almost already it's telling you, here's a good channel, here's a good channel. Large cap stocks often will retrace into the exact same price area. So if you have a trading plan and you get in with a small share size, usually you can wait it out for it to come back. And if you guessed wrong, it's not a guess, but if you made an accurate assessment of which way it was going to go based on the data that you have learned, and it was wrong, which is always a chance. I have a link to Mark Douglas's book, Trading in a Zone. You might want to read, because he basically will teach you that you need to look at the probability of every trade going against you. Always have that first in your mind, and then you set your max loss accordingly per trade, because then you live to trade another trade that day or another day. If you just keep your losses slow as you learn to day trade, which just by watching this one video should give you a big leg up. As you learn, and you keep your losses low, then your winning trades are going to make you a profitable trader, and you will become that 5 or 10% that make money trading. I believe in you. I believe you can do it. It takes some time. So here's our first lines, right? So I'm going to reduce this chart, double click, and now I'm going to open up a 5-minute down here that's only set for 2 days back. All right, so now I can't mark it here because that's today's action, and we're going to assume that we started it right in the morning and we don't know what's going to happen today, right? So now I can go 2 days back for a high and a low. So it looks like it would be probably on the same day, here to here. Very similar to what we already marked. And I'll mark it again. I'll click it on the low. Now you can do this on the bodies or you can do this on the wicks. We'll zoom in on candlesticks soon, but there's the high, so we'll go ahead and go up here. Now I'm going to go ahead and make these a different color so we just know which ones were the 2 days, right? Now your Fibonacci could have been from high to low, like I could have gone down that way too. In this case I went low to high. So now we have additional support and resistance levels based on a different time frame using the Fibonacci. So now we got even, if you look on the 1 minute chart, now we have created a channel because of that. So this is basically telling you when to, when you should think about going the opposite direction. Now it just broke it, so there's a double fib line here that we put in here. So you might look for that to come down, bounce off of it again. But this is just giving you an overall basis if you're keeping track of your share size and your max loss, where you might be able to ride this up and down. But we kind of like to have some other levels, right? This isn't really enough, right, to figure out where to turn around if we're only using this data. Like, it wouldn't have been nice to know that that move was right there and that was going to turn around again? So there is a way to help predict that actual thing from seeing that actual thing. What that is, you go into historical data. So we'll start with a 4-hour chart. And I'm just going to use the 4-hour chart today. So these are 4-hour time increments. Each one of the black spots is a whole day of trading, and this is a extended and pre-market and extended market from the previous day. So the gray area is when it's not open session. It's extended and pre-market session. Now there are ways you can trade that, but primarily people trade in the open session, and that's where you see most of your price action. So what we're looking for, just something so simple, right? We're just looking for something very simple, is we're looking for, now I think I have a weighted VWAP here. That's what that is. I forgot to take that off. But so we're just looking for areas where the price action came to a point and then went the other directions. And the candlesticks show that. So I'm going to get off the Fibonacci. I'm going to go over here to price, and I'm going to start to mark some of these levels out. So I'll mark a level there. I'll mark a level like right there. There's a little subjectiveness in here, but you're trying to touch as many, as many areas that it went across and tapped. This is another one here, without getting, so many that it's just, any line tells you to turn around. So you've got to, so there's a lot of it here. And that's pretty much it for the 4 hours. I mean, I could put one here, but I've got two here, here, and here. And then I know that I might have marked a few down here, but I can see we're way out of the price action right here, because here's today, and we're already way up into these levels. So, but if this was the beginning, I probably would have marked more down in this area, like some of these absolutely abrupt turnarounds like that. That's such an obvious place. So I'm doing that because that's where the price action went the opposite direction. So when that happens, there's a lot of people getting in and a lot of people getting out of trades, and more so the way that it goes, going that way. So, I mean, as far as whether they're doing the ask or the bid, which is a little bit more complicated, but the idea is that you're looking to see when the stock stopped abruptly, or stopped and what they call rested or consolidated, where a lot of times the volume increases and some of the big institutions trade in that area. Other times it's just indecision time. So you look at, if the volume doesn't go up, it's just like it's deciding, and there's not a lot of people deciding. It's the same amount of people, maybe different people, I don't know. You're looking for that to turn around so that you can mark it. Like, actually, I probably should mark one more level. I would probably mark this area since it was hit so many times right in here. I tapped it, tap, 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 tap. So that would have been, if I'm just using the 4-hour chart for support and resistance, now I look at it and I see, did that help me at all? And it really didn't pick up this level, which is a little scary, because that would have been great to know whether that, did I miss that? Let me just make sure I didn't miss something so obvious there. Let's see here. Yeah, I kind of did miss a bunch of stuff here. Like, here's one. Turned around right there really pretty abruptly. Well, it stopped, came down, so it's actually like right here. That might be the actual level that is not marked over there, because that's was such a clear spot. Really, I don't think I'd mark. I wouldn't be, I guess I could mark that. I should mark the bottom of that. Yeah, that definitely should be marked. Okay. All right. I can't see any other clear. I did that pretty fast, so I missed a few spots. Let's see if that helped us or not. And it did. I don't know which one that was, level 10. So that definitely helped us. Let me just go see where that was. Was that obvious? And I missed it. That's price level 10. So that's right there. Yeah, so double tap here and then 333. Yeah, I should have marked that the first time. So I just missed it. And look at what that historical data has told us. It tightened up this channel. And then if you were holding it the wrong way or whatever, it kind of gave you a point of no return to maybe get out of the trade, or you could double down or whatever. But this created a smaller channel in here to trade up and down, up and down, up and down. When it broke it, it kind of went down again. Well, it almost broke it here, almost broke it here. Whenever I trade and I get near these levels, I'll either go the other direction just before it and manage a bad trade, or if the volume is really high, I hold it through the move if it kept going. So you're going to need to look at other stuff, which I'm going to explain to you. But this gives you a general basis of where you can take your trades in and out. So if you knew to get in this trade short as it was going down again, right, you're at $229.66, right? Then you held it through the whole move till you got down to your Fibonacci level, and then even went through it. You're getting down to 229.08. So you're making 57 cents, 58 cents, 57 cents. So if you could afford 500 shares of the stock if you made PDT. So you would have made a lot of money, $250+ on that one trade, holding for that many minutes. Now you can trade this exact same strategy on a 5-minute. So we look at this, and this is a little bit easier to call here on some of these. This particular up and down ceiling floor, that's how they call it out in Day Trading Volume 1, which is sort of the basis for so many strategies. That's why it's been a best-selling book for a long time. I highly recommend it. I have a link to it as one of the top trading books. I also have Trading the Zone, Mark Douglas, Best Loser Wins, Tom Hougaard, and then 3 other really good $1 Million Margin Club books, the Candlestick Pattern Playbook, which I'm going to talk about a little bit here today, Day Trading Volume 2 that is, and then they have a third one they put out more on candlesticks with games and puzzles that help you remember. And then finally their really good book that's fairly newer this year is the Day Trading Volume 4, which is 4 open strategies, which we're going to talk about what would happen if we had traded the open on this using that strategy. But right now, let's finish this strategy, which is just the basis of any and all strategies, which is creating support and resistance levels and then figuring out how to trade off of those. So I just want you to take a second and think about, all I did is create 2 Fibonacci levels, one on a 10-day 5-minute chart and one on a 2-day 5-minute chart. And it gave us these incredibly useful levels to figure out when to trade. And you can lose money if you enter in the wrong position and write it the wrong way every single time. Like if you went short right here and then it went up, if you went, or if you went long right here and it went down, you can do it the wrong way. So that's why you have max loss per trade. Like you want to get out the second you've misjudged that. Or if you're managing a bad trade, you want to have max loss as you manage it and you watch it. Sometimes you can double your positioning size. It's kind of more of an advanced way to trade, and that'll lower the price or raise the price depending on whether you're long or short, and what your original price per share is. And that's a quicker way to get out of it and say I've lost my money quicker, or it might give you a chance to recover and get out because you don't like the position. A little more advanced way to trade, probably losing the beginners on this. Main thing is mark the ceilings and floors using historical data. I use the Fibonacci, the Day Trading Volume 1, like the beginning book for everybody, tells you start with a 4-hour. If that's not giving you enough support and resistance levels, you can find them on 1-hour charts. If that's not going to do it, then they say go down to the 15-minute. This is the 15. I don't know if I mentioned this is a 15-minute chart, and you'll be able to find more levels because it's kind of zooming in. So if you were to do that like here, you could see we would have got another level here on a 15-minute. And you might want your channels to be tighter than this. This is 229.69 up to 230.19. So you have 35 cents, 45, 50. That's a 53-cent channel. So maybe you might wanted to mark this when you opened up a 15-minute. Look at that abrupt turnaround that you didn't pick up on the 4-hour, because the 4-hour consolidated these time frames and then made an average time frame from a 4-hour. So that's why the book explains, like, go down more and mark other levels. So had we done that, what would that have looked like on the 1-minute chart? So that would have given us a more, look at how sharp that was, a dynamic place to turn around right there. Yeah, that's the latest one I did. Look at how that made a difference. Tap, 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 tap. This is not where I marked it. I marked it way back there, and it respected that. That's, historical data. You're basically trading with the crowd. It's like, what is the crowd doing? There's really not much else to look at except historical data. People look at it different ways. They go back, only look at it for the day or the week or the month or the year. And then if you're intraday trading, you're going to look at it at the, from the 4-hour time frame on down, and then you're going to somehow market. There's different ways people use to market. I'm showing you the simplest way to start trading, to market this way. But there's more. There's other things to make it easier for you to make money. The real only danger here is you. You're the danger by not cutting your losses and by not continuing to learn and not having the right indicators. And possibly, yes, you can mark your levels at the wrong place, but if you use a candlestick chart and you use Fibonacci levels like I just showed you, it's pretty easy. So just refer back to this video. Now again, people do it in different ways. You might not, some people might say, no, you mark your levels, on this chart. There's different ways that people do it. So it doesn't hurt to get more knowledge. Keep track. I'm a big proponent to logging, figuring out what's best for you, writing it down. I like the writing it down because I tend to remember things a lot better. Goes way back into my my learning in school days. When I write things down, I'd write them more and I would remember. So now some people in the new modern era that aren't like grandpa age like me, they might say the only way, man, is digital. You're out of your mind, but it's hard to write notes. It's hard to have them right next to you. I don't know. People argue with me all the time. I have all ages that trade with me, obviously. And so however you take notes, you should take notes. And then I have a link to a whole bunch of books that have strategies for each thing, like crypto and futures and forex and options. And there are logbooks, individual logbooks I put links to that have lessons or strategies from like the top traders in the field of those specific things. They're all different people, and they has their strategies in those logbooks. So if you like one of those kinds of trading, if you're doing that kind of trading options that you probably already know, if you're really good at, but it doesn't hurt to see what those other guys are doing, and also having those great logbooks. So now what else do we do here, guys? So you could put more levels, you could put more lines, you could get really crowded, but really the next thing to do, and this is now those of you that have been trading along with me know that I was a former math teacher, and I do coding, for other, I do coding for Charles Schwab and Thinkorswim, and then companies can buy my codes and stuff. So now I offer a lot for free here, and I've just put a brand new one out. I did offer variations of this for free. If you go back a few videos, it's sort of like a treasure hunt where you can find this particular indicator. But right now, I'm going to give you the one, I'm going to show you the one that is the latest, that will be available at the $1 Million Margin Club probably by the time you watch this video. Since this doesn't have trading, this probably isn't delayed. So let me add this. Mine are all under MMC, which if you're buying them or getting the free ones, they're probably like this. No, actually, on the free ones, they're going to say DTS, Day Trading for Success. So, but they're not going to be over here until you upload them up into your own Thinkorswim. So add selected, and remember that when when you're doing layouts too, like none of my free layouts are going to have these custom indicators until you load them in. And there's a whole bunch of episodes that have them for free. There's the most recent one with Charlie on the cover, who gives away 7 free scripts, and there's a total of 10 in there overall. So I'm going to apply this now. What a jumbled up mess, right? So what this just did is it just marked every half and whole dollar. So now why would we want those levels? Well, those are psychological support and resistance levels. So I just wanted to see how today, had we started with those, would they have made a difference with the fibs and everything else that we had? So here's where the day started. So it blew right through that half dollar, right? But it did stop at the whole dollar up here to 230. So that's a good thing with that support and resistance level, and the whole dollar was kind of like another area. And then the half dollar helped us turn around here. So now not only do we have these great Fibonacci levels and these historical data, now half and whole dollar, where a lot of people will set their trades, preset them, or they'll just be waiting. Oh, I'm gonna get out at $229 even. That's my mark. And they'll set it on their ladder, or they'll set it, on their, however they do their limit orders. They'll just set it to sell or to buy at a certain level. So you're, again, trading with the crowd. So knowing how all those are going to come in and go out at those half and whole dollar levels and is important, because that's going to affect the price action of the stock, or where the candlesticks are going to show it. So it's going to, it will affect the price, the value of the stock. So half and whole dollars are no joke, and almost any day trader or scalper in particular is going to tell you. But even when you get into month-long and week-long, when people say, oh, they're not, if you put in limit orders, they're not any stop hunters out there. This is a little confusing for beginners, but a lot of times, and there's a huge debate whether this is true or not. And I can tell you from my experience, this is absolutely true, being trading for a long time, that they will, institutions will search for a large clump of shares that are set to buy or sell at a certain area. So if they're holding there, they will artificially make the price go up or go down to pick up those shares, so that they get picked up, and then they will inflate the price the other direction. That's put simply enough. So if you have enough money to do that, and the large institutions do, and they all have high frequency algorithms that are designed by the smartest people in the world. Yes, I'm complimenting you. I know at least one of you. It's really hard to, how do we as simple day traders deal with that? Well, we go in between the action. Whenever you put anything in that they can see this, a lot of people don't understand. And when you first learn, that's so unfair. How can they see where I'm going to sell my position? Because they have a right to see it. They can pay to see your actual position. And a lot of people will do, and I have videos about this, but a lot of people will set it at the same area. Like, you see how many times the price action stopped right around here. So a lot of people might go like, well, if it's going to go below this price level, I'm just going to sell. I'm worried because it's really going to drop. So it won't just be you. They don't care about you and your 100 or 500 shares. They care about, 200,000, 300,000, a million shares, or millions, all in the same area. So that's why I got off track there. But that affects where the stock goes, where people put their stop losses. They can be stop hunted, and you'll lose your position, you'll lose your money. And that's why I always say set alerts on your phone or whatever, like, hey, it broke that level, I think I'm going to sell. Don't let everybody see what's in your mind. Now, there are still people that scream at me that it's all fake, hocus pocus, that's not true, and you're just adding to that rumor, professor, by saying that stuff. Well, sorry, I guess there's both sides. People think both ways. Why do you need to do it? How about that? Why not just set an alarm? Why do you need to do that? Is it that hard to put an alarm? You can set the alarm right here, right? And then it'll go deet on your phone. and then you just go dot, 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 or if you happen to be in front of your computer. Just a thought, people. Do what you want to do. So anyway, historical data, half and whole dollar marks are where people in the crowd trade, and knowing where those are so important. So now we've got Fibonacci levels. We've got the best historical data based on the candlesticks turning around. That's just for this stock, Apple. And now we've got half and whole dollar. And now we're really starting to narrow down as it starts to go up, sell, but we didn't know it was going to turn around there. So we didn't get that, we might want to wait, it's coming down here, buy. And then we might want to sell as it hits that line or hold it, see what the volume is. Then we might want to sell as it hit that line or hold it and see what the volume is. And then we might want to sell and take a lot of money right here. So it's giving us choices and ideas based on these support and resistance levels. Now, there are people that will argue that you don't. I just know. Well, they just know then. That's good for them. They just know. But why don't we make it easier for everybody and show you where these levels are? So that's what I'm doing here today. I'm just going to show you where they are. I don't think it's too crowded. I think I can easily see where to go in and go out here. And I'm not even, because really what I'd be doing is I'd be trading like that. I'd be really being able to see this up close. And I'd be using other indicators. So let me give you, now we're going to get into other ways to know when this stock's going to turn around. So this is still the simple ABC lessons. Now Thinkorswim has all kinds of indicators. They have a volume one that pokes up here and it shows you what the volume is. So obviously if the volume's going really high as it's coming down and hitting this whole dollar mark right here, the 230, you're thinking that it's probably going to keep going because the volume's going down. Well, I can do you one better than that. Hence the scalping indicator. So this is an amazing indicator. You can get it here on this channel for free. There's a bunch of different versions that the $1 Million Margin Club sells. But basically, it shows you what's going on right inside these candles. So that's the sellers, the red, the green are the buyers. The blue is the volume. As you can see, this told you that it was turning around even before it turned green. You could see it. But you also can look at the price action here, the market maker, and tell you like, hey, it looked really strong until right then. Is that just a pullback or is it really turning around? Now, when you get into reading your candlestick patterns, this is a doji, which is a sure sign of a turnaround. So now you can look at the scalping indicator, 88%, 100%. Jump on that move right now, real quick, and you would have got it a few cents ago. You would have got it like 05 or something. Yeah, right down here, 05. Already made 4 cents, 3 cents, 4 cents. You could already jump out if you had 500 shares, right? So you could already jump out 15, 20 bucks if you just want a little trade. Or you could have only had 10 shares and made a little bit of money. But you use the scalping indicator for short-term decisions, or you could be holding it and you're thinking, if it breaks this whole dollar, I'll get out. Or certainly I might get out. This is my fail-safe, 5 cents down. Now it's showing you that you have a better and better chance of making more money as the price action goes up. I read this scalping indicator. This is the volume, and the buyers won out, but they didn't go to the top, so it didn't give me a lot of confidence that the buyers will continue to go up. It did it again. The volume went down, and the buyers didn't go to the top. And now I'd be thinking, I don't know about this. I'm worried about this going back down. I'll see if it's going to rest this. So I would have taken my small profit and either started to think about shorting this or waiting for a more definitive move. Going, you only need a few cents to make money, guys. Just a few cents per trade. Right now, there are no fees on Thinkorswim. You don't get charged. And the exchange doesn't charge you much if you're trading 100 shares. So jumping on that would have been good. Now, I would have looked right here as a support level on this even dollar, but I would have kept an eye on this scalping indicator, like what's going on here. This is really strong and the volume's going up. Is it going to break through? And it did. Boom. And now I would think about taking my profit right there, or at least I have a cushion if I went short. So now I'm watching for a second. It starts to go up. I'm just going to get out and just take my profit and look for another entry. So this indicator and these lines basically told me what to expect, told me how to see the future. That's how simple that was. Now, if that was difficult for you to understand, watch it again, because it really isn't that difficult to understand. Now, it might not go the way that you're calling it to go, and that's something I do. I quarterback for trades. I call the trades, and I'm wrong a lot, and price action might not go exactly, but boy, does it ever give you a leg up or the probability of the trade going your way, the more things you have marked. Look at that definitive stop there at that level. I mean, you saw, we marked these levels from previous days. Bam, hard turnaround, highly respected. And it started to make what they call in the candlestick pattern book, candlestick pattern playbook, a tweezer move. Had that gone up like at least halfway up, I'd feel better about a tweezer move, which is even the even price action. But now I'd be looking at, is this going to break the $0.50? Because I'd be more inclined to ride it up if it is. But it seems like it's having some trouble breaking that, or whole dollar, I mean, that whole dollar line. So each one of these indicators kind of give you a lesson like, and then you're just able to react quickly. Like, what are you going to do? So is it going to hard hit this floor, hard floor again? You know, like bam, is it going to hit it there again and go back up? So you're waiting to see. What's it showing here? Buyers are, they didn't go to the top of that. Sellers are, there it goes. I was looking down here. So the sellers went to 100% and it broke it. So now you would want to get out. If you were riding that long, you'd take a very small loss, or you would have taken your profit at the whole dollar, and you would have gotten out as it broke that level, and you're waiting to see, because you're in what they call a void here. Like, this could shoot down here all the way because there's nothing else, or it could start to do some weird channel trading in here. So what do we do in a case like that? Well, there's other indicators. Now I'm going to show you one over here, and guys that have been following along, most of the time I'm going to put this over here. So these represent other chart time increments. So when you get into trading as a professional and starting to make money and a living, you always should learn about what the perfect entry is. So and you're not looking to turn around and do another trade. You're looking for like one trade every 5, 10, 15 minutes, maybe every hour, or one trade a day, whatever it might be. You're looking for the perfect setup that calls out to do that trade. And when you do that, you figure out, where do I look to take my profit based on the indicators and the support and resistance lines and whatever else I'm using? Where's a likely spot where I just want to take my profit here, or at least be ready, if it's not continuing its move, to get out? And then also, what if it didn't go the way based on my perfect setup and it went the wrong way? What is my max loss? So you want to have those numbers down in your log, on the screen with lines or whatever it might be. See, let's see if it bangs against this whole dollar and goes right back around again. So it's doing a little. Now with Apple, you're not going to get huge spikes. So you're getting this ping pong pong action here, where you can actually make a few bucks as you ride it up and down, up and down. That's definitely a strategy in day trading volume 1. That's why they marked the ceilings and floors, and now it went back down. So you could have rode it up, taken it and gone short, and rode and got it down again. Again, I look at this scalping indicator. When it doesn't hit the top, it's telling you there's not as much confidence as to keep holding it. So that would have told me, hey, trust the resistance level and go down with it. Trust any patterns and go down with it. Your 5-minute is straight down. Your 15-minute is straight down. When I was starting to talk about multi-chart alignment, now without opening the charts, you can see if people are only trading on 4-hour charts, 1-hour chart, or a 30-minute chart, what did they see to make that decision right then? They're making the same decision you're making, but at different time increments. You might not like the 1 minute. You might want to be making that decision on a 5-minute. So you get to see, what is the 15-minute, 1-hour, and 4-hour people? What do they see? And when do they make their choice? When does that 4-hour come up? You've got 2 points of data here. First, you've just got overall, when you're going in a trade, what are they seeing? They're all seeing short. They're not even thinking about going long. This is, for them, down, down, down. They might be thinking about it. I'm generalizing. There could be other indicators, but for the most part, you're seeing what they're doing here. So let's open up another script here. This is a custom script that's really amazing. It's one of the best scripts out there. This one you'd have to go to the $1 Million Margin Club to get, and that is going to be the I want to do it with labels. So this is the multi-time alignment with label. Oh no, labels only. Multi-time alignment, no labels. Multi-time alignment with label. Okay, sorry. There's 3 of them here. All right, so I'm adding that in. Now that's going to come over on this chart, and there's going to be all these lines, vertical lines that I want to explain to you. So why is that there? Okay, so we're on pre-market. That's why. Here we go. See all this big mess down here? So let me explain what that is. Now it's going to get more confusing, and some people might say, what are you doing? By the way, these are the half and whole dollars on the prices over here. So let me zoom out of here and make this not so confusing, and we're going to trade in the moment. We're not trading back here. We're only using past data on charts to figure out the moves, and then we mark that so we don't have to keep going back and look. Now this got your multi-chart alignment over here on the chart you're trading on, and it's also got every 5 minutes marked. Now I used to trade this way before I developed this indicator. I would always base my perfect entries based on the 5 minute. I wouldn't really look much further than that. So having you think about what happens after every 5 minutes. What are the 5 minute people looking at? And that helps me make my decision. So these are marked at every 5 minutes, but also marked at every 30 minutes. So within that 5 minutes, there's a 15 minute. I mean, within 30 minutes, there's a 15 minute and a 30 minute. And then look over here, 1 hour. So it's going to keep showing you. There's an actual number right here. You can't see it because it's just dark for some reason. But as you get near it, you'll see that mark there. But anyway, now when I'm going to make the perfect trade, right, I can look at my scalping indicator the way I just told you to look at it, right? I want these things all close to me. I want them all near me so I can see them really close and really strong. So now I get to see how many people are thinking about going short, going the opposite way, how many people are thinking about going long, and when are they going to make their decision? They're going to make their decision most likely right here, unless they're trading in a 1 hour chart, or unless there's a radical move, that pops everything a different color. I mean, I'm giving you the basic average of what to expect. So now if I'm looking for a perfect trade, and I'm not trying to do all these calculations everywhere, I'm just looking for a perfect trade based on the data that I have here. Now I get to see what are they trading at, where are the support and resistance levels based on historical data and Fibonacci levels, and when is everybody about to make a decision? So I would look at the scalping indicator, and I think about where is it. Now, as you get good at the scalping indicator, I'm going to interrupt myself. You can actually start to see within these actual lines here with the dot, you can actually start to see patterns, because patterns are really important too, right? So down here at the bottom, you had like a morning star. And you had a tweezer move here. Now those are 1 minute, so some people say, oh, I only want to look at 5 minute patterns. So here you could say you had a doji or a spinning top right here that is a sure sign of a turnaround of it. So that's in Day Trading Volume 2, the Candlestick Pattern Playbook. So I would recommend to put in the mix of everything else here that you learn that book. And this day trading takes time, guys. If you really want to make a living out of it, this is just the basic stuff that people don't talk about, and then they don't mark their charts anymore, and they say, oh, I don't know, I just knew how to go. I just knew to go in and go out there. So, or they've got some other method I don't know about, or they're not good at day trading and they just say they are, or whatever. So you need to learn yourself, how to make these decisions. So I'm basically giving you data here to show you. I'm looking over here at somebody else. I'm giving you data here to show you, to cut down on your curve and the probability of you making the right choice. Nobody knows for sure. Nobody knows. You just, just skewing the probabilities in your favor with the more that you know. That's all, but I'm not going to tell you if you do this, you will make $1 million. And you, like I said, you should always speak to a financial advisor. But these are the tricks that, and not so much tricks, this is just the education that traders do that it's very hard for you to find. It's very hard to find this stuff, simple stuff. They're usually trying to sell you a course. I don't sell courses. So, I mean, something's going on, but I have a hard time finding people. There's a few people, actually. I'm not going to call them out, but there's a couple of really good people out there that are showing similar stuff that seem really, altruistic, like they're doing it to help you more than just, sell their courses or whatever. But anyway, it's hard to find. So learning the patterns, learning the support and resistance levels. So we have the half and whole dollar. We have the historical data. We have the Fibonacci levels, which are here. And I also have marked on here other things that help me decide, where the moving averages are, and then your VWAP, which is, it's supposed to be the value of the stock at any given minute in time, but in intraday, that's not really the truth. But what people do is they use that as another waypoint. Like, hey, it's going to turn around at the VWAP, the volume weighted average of the price. So they will use that, and my VWAP's right there, that red line kind of hiding right there. It's kind of right at that level. So I would respect that level because I'd be using the VWAP too. So I'm trying not to give you so much data that it's just like, how am I going to remember that? Well, come back and watch the video again, and that helps me. But I mean, once you start to practice and get into it, see, this is just a no-brainer what it started to do here. All these are pointing down, 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 down. All right, you've already broken that support level. All right, there's nothing else till down here. Sellers are taking over here. So this is telling you you've already should have taken that move. And now, you saw the change over here. So let's see if it continues, or you should have gotten out right then. So if you got into that move at the half dollar as it bounced, you would have been at, the whole dollar, that would have been 230. And as it started to turn green right here, you could have got 15 to at least 12 cents and got out right there. So 12 cents is a lot. Now it's turning back around, and this is kind of a mixed. So you would say to yourself, is it going to break that level? It did. So, and then spinning top turned it around here. This is the first time it's green on the 15-minute. There's definitely some conflicting stuff here. So I would probably wait a minute before I took a position if you're looking for a perfect trade. I might look for a short off of this level again and try to ride it down again. Let's see if it's going to bang up there and hit that. But I would look at this data. See, the buyers took over, but look how the volume went down. Not a lot of people believed in that move, and it didn't even go to the top. So this is telling me that short's probably the way to go. Where do I get into the short? Where do I go back down? Off that even dollar amount. So when you look up here, you're almost to 230. So I'd probably take a chance right there. I could be wrong, but I probably would have gone short right here. So there's 1 cent I could have made. Let's see if it keeps going down. I don't like to see this go up if I'm in this position, but I have a max loss set. That's my 20 moving average there. That's going to act as a resistance. Let's see what happens. Now, if you look at the bigger move, this is saying there's a turnaround for a retracement, and it hasn't happened yet. And this is starting to tell you that too. If I look at the micro move, it was telling me that this should be going back down. So there's conflicting things. So I've called out the micro move because it's been doing that. Boom. So let's see if it does it again. And this is just a lesson in the probabilities of trading. So now it's back at my position. And I'm thinking twice about holding it because I'm not liking what I see over here. But it is making a hangman over here, another pattern, which is a sign of a reversal. That was pretty strong, but it didn't make it to the top. And I'm really micro reading these things. Most traders don't, unless you're really a professional scalper. They won't even look at half of this data that I'm showing you. I'm trying to show you to make it easier to cut your curve down. But now the trade's going against me, so I would have to have a max loss, whether that be $15, $20, $25. I probably would call it that I'm out at this fib, which is a pretty big number because I was taking little trades here. But I would hold firm for the downward move still because that's what it's been doing. And this just told you that, that doji just said, nope, we just lost confidence. That's a turnaround. So that just told you that it's going to go back down. Now, probability, that's all. Let's see what happens. I'm calling it to go back to my original thought. So I'm back. I'm already making money on my original trade. There's the market maker. Now I'm making 4 cents on my original trade. Will it stop right there and I just get out with 5 cents? 5 cents times 500, $25. Nope, but it went down. Now I'm making bigger money. So it did go the way that I thought it should go. I got scared here. Scared. Nobody knows 100%, guys. So we just call it out. Now, if I was trading live with a group, I would have taken probably 3 trades in here, and I would have been still in this trade doing well. So just trying to show you how it goes. Now, I might do something since it stopped down here twice and made a tweezer move. This is a tweezer move going up. I might mark this and just make that a level as we go along. That's not going to be as strong as these, so I would make this white if I was to keep that, just so I don't forget that it's not a real powerful one. It's just a recent price action one. And I just look at that like, hey, maybe that's where I should take my profit right here, or just take it and get back in it again, and keep going down. But now I banked it, so people see me reverse a lot. Guys, if reversing's not working for you, just tap your buy twice, your sell twice. It's the same thing. It does the same exact thing. But look, I would have held into this move, right? Because look at that. Even though the volume didn't go up, the sellers are at the top of the volume. That told me this is still really strong. These are all red. And guess what? I have more to show you that's going to make it even easier to call these out. All right. Now, I haven't been looking at the MACD, and I'm not going to do a huge video about that and the MACD crossover, but I will tell you that this got stronger going down, so this is telling me that it's going down as well. These are telling me that it's going down, right? Now, I'm looking for the next 5 minute. Remember, it crossed over down. That was red as we hit that 5 minute. And that just called it going down, right? So now it's coming back off that level I drew. It seems that this level, 229.86, 225.985, there's a lot of people that think it shouldn't go below that, right? Because it stopped dead there. So you have to take that into consideration and look at it going up. So I would have definitely gotten out of my position, especially since that made a spinning top or a doji, reversing the decision right there. So I would have gotten out, look at that, probably reversed if you know how I trade, and been able to ride this all the way up and be ready to get out right here or right around this level, 230 even. 230 even, I would be thinking about taking my profit right here, and I would have made 12 cents on 500 shares. So $60 right there on that one candlestick. And of course, if you had only 100 shares, then you make 100. You'd make $12 or whatever. So it just depends on how much you're willing to risk on your trades. And you might be happy with $50 at the end of the day and just take little trades in here, and you're never upside down much, right? Well, let's go on and show you even more ways. Hopefully you were able to see how I called that, right? So now we're going to go in and we're going to show you one more little secret here. So this chart's set for today, and I'm going to put in the other cool indicator. Now you don't have to have these indicators. I would get this one no matter what. It's free. You don't have to pay for these indicators to do what I just showed you. I'm just showing you ways to make it easier. If for whatever they charge over there, it's probably worth buying it. Okay, so here's the market magnet. I'll have links. So this is with labels, so you can get them with or without. And I'm going to bring that in over here and show you a whole new thing. Now you got all this new stuff over here. Now you're going, how am I supposed to see all this? How can I possibly trade with all this stuff, right? Takes practice. And you might not want all these indicators, And usually what I do is I put these over on the right. So you can do that by just taking this, let's see, why is that? Yeah, I just take this and I drag it down to below the market magnet. Now those are going to switch, and those came over here like that. Now let's talk about this market magnet. Now this is based off the volume profile. It's not a lot different, but I find the differences can be pretty significant to help you trade. So let's go over mathematical formulas. Similar, it's based for intraday, those of you who care about that stuff. And then it's giving you more things to look at. So you see these light blue lines here coming in here, the shaded lines here. That's showing you price at volume at a certain price level. So the price level would be over here, and that's how much volume. It's kind of indicating volume, just like these blue lines indicate volume down here. It's indicating volume at that price level, right? And then in the middle, which is called the market magnet, which is the name of the actual indicator, and this magenta type purplish pink line. This is the overall average center of all that volume up and down since the market opened today. The reason it's called a magnet is the price action seems to gravitate to it. It's actually the opposite. It's just showing you what's already happened. But if you look at it the other way, like it's alive, you can kind of predict, helps you predict with everything else, where that price action is going to stay. So you can see here, you've got these levels to go by. You've got the scalping indicator to go by. You've got these vertical lines that are telling you when the decisions should be being made and what are they seeing when you make that decision. And now it's telling you like, hey, it probably won't go too far from here. And if it does move from here, you're going to see some dramatic things happening on these other indicators, like big moves. And then these arrows are basically telling you like, hey, this is the top of that volume. It drops off from here to much lower. You might see see how it's below here. As you go over, you might see some levels above this. I don't know if it's going to show it. Yeah, see. But on average, there's so few people that it's staying nice and tight right here. So the way you read this is, if I see more below the magnet than above, I'm more inclined to think that the magnet might pull down, or thereby the price action pull down. And then if you see a lot of it down here, and you see the candles, the magnet will pull down. This will actually move real quick, like pop. And it's almost like a hammer, hammering the price action down. And the same thing happens if you see a lot of lines coming in, the magnet will pull up. Now with Apple, right now, look at how low you're at this time of day. I don't know what time of day are we at. We're almost at the market close here. No, I get confused what time it is these days. But we got a couple hours. This is the power hour. There are people trading in the studio right over here. But this is low, right? Probably everybody's trading Tesla and Nvidia right now. So you can't see the dynamic action, but if you were watching this on Nvidia or Tesla, you would see this hammering down and springboarding up all over the place, helping you make these decisions. So now what this tells you up here is this is set for large cap. I programmed it myself, made it available myself, coded it. This is based on 50% of the overall volume, right? Not a lot of them are set for 70% on Thinkorswim. This is set for 50%, and that's telling you, look, you're at the higher range of when you should expect that to break out. So you should be thinking about going the other way. And the arrow actually tells you, guys, it's over. So think about going down. Again, probability, that's all. It could break out, And then if it got down this low, it's telling you, hey, most likely it's oversold, it's going to go back up. So, in that they're basing this whole thing on a mathematical formula that's available over at the $1 Million Margin Club. If you go over to the script and you see the description, it shows you, if you want to try to create something yourself, the math I use to create this. And this is going to show you that it's going to go the other way. And then this kind of really light blue in here is that entire range lit up. So, and then these are the bands, like that's the peak, the green right there, 50% peak, that gives you the price. And then the trough right there gives you the price. So if you're into just reading prices, it's telling you the prices. It's telling you the price of the magnet. Those are going to change as the averages recalculate, right? Which is done in seconds all the time. You can see now right here, this is about to have to make a decision right here. So I don't have all these opened up, but this is going to come to a close in 6 seconds. So if I looked at this, I'd be inclined to go up on this because it's at the bottom of the magnet. But I might wait, to see if it. So I go up. I'm in a losing trade right now. And then I wouldn't think about getting out if it keeps until right down here to 83. So I'd look right here. So yeah, I'd think about getting out right now. 82, I'd get out. So that was a bad trade. That was a bad one to show you. But to me, it looked like it was going to go back up there. It was going to do some of the seesaw. It didn't. And it's not making a bull flag. So, but it is stopping here. So, I mean, maybe I panicked too soon. It looks like it might be going right back up again. I didn't panic. I do have some ego. But I probably would have, you know, knowing me, guys, the way I trade, I would have had to be a much bigger loss before I flipped around. But if I think that it's going to keep going down, I'm going to, you know, take a lesser loss, obviously. This is pretty hard to call, even with all these indicators, because of this wishy-washy stuff in here. So you just do the best you can by using these things. And then there's the high band and there's the low band. And what are those things? That's the overall high of the price action today. That's the high band. And then the low band would be a dotted line somewhere down here. It might be hidden. I think it's right there, hidden in there. Yeah, see that red light up? So you see the overall range. So this is a very helpful indicator. It's more helpful with higher volume, just like candlestick patterns are definitely more helpful with higher volume, right? So just trying to think here. I'm trying to think of how else to show you guys that's basically showing you sort of how to trade the RV strategy. Oh yeah, so let's go over to the open. Now what would have happened on the open strategy today? So we'll look at open strategy number 1. Let me zoom in to this, just to where we would have marked this out. Would have been right here. And you wouldn't need, you'd probably want the half and whole dollars. You wouldn't need any of these other indicators for this. So this chart would be way cleaner. So let's clean it up. We wouldn't need the market magnet. I would probably keep the half and whole dollar. I wouldn't need the multi-chart alignment. Let's just get those up. And I would keep the historical data. And then I would just, oops, I shouldn't have done that. I should have zoomed back up. And then on the first, the way you trade the open, almost every open strategy is based on a breakout, meaning the price breaks out of a certain level. So the day trading volume 4 has 4 different levels, and then their companion book, which I have a link to as well, has what they call the Holy Grail, which came out after, which is combining the 4 strategies together and then being able to trade all day. How do you do that if you wanted to trade more than the open? So I am going to do a video, a very detailed video soon about the details of the open strategy, because even with the book, some people are confused. So I'm going to walk through what they mean page by page in that book. I was one of the original beta testers for the strategy. I truly believe that the strategy is the best strategy that there is out there today. But it's not, you know, a lot of people don't like the stress of trading the open, so they don't think about it that way. You know, so they don't think that that's a good strategy for them. And if that's how you feel, then that's definitely what you should definitely do that. You know, keep that as your, let me auto zoom and do you should not trade it is what I'm trying to say. So let's go from 7:30 to 9:15, right in that area. So now 7:30 to 9:15 is where you mark out the open strategy number 1. So we look for a high. Here's a high. We'll take that high. So I'll move this price level 1. So this closed at 229.07. So let's make this breakout high. And we'll make that green. We'll make it like dashed, and we'll give it a double thickness. So there's the breakout high. And now we can go all the way to 9:15 to find the lowest candlestick And that is right here, it looks like, right? Because this is, well, there was kind of one right there. And there was one right here. That's at like 912. So let's mark that. We'll mark that the breakout low. Now, a lot of people ask me, like, well, how do you know which stock to trade? Now, I would start with the same way you trade. You look for the RV, like the support and resistance levels. That's what I would start with. But then I would use what they have is the volatility meter to make sure that has a chance for that stock to break out. So I'm not going to go into a long description of the volatility meter. Let me just get this. But that'll be the next video I do. I'll really describe how to trade each of these. I just wanted to give you a general idea. So we're taking Apple, which any given day is actually quite a good stock to do the open strategy with. So this is on the open strategy number 1, which was, so let's just take a look at it. So now you cannot trade in between the breakout high and low. You can't take any of these trades, right? You cannot trade the first 1 minute. So that is part of it because it's unreadable. There's all these pre-done orders and stuff. So here's what you ended up with when you started to trade. You can't take that trade. You maybe could have gone in there, and if you did, you probably should have got out right at the fib, which is a 229 to 2. That's like a 4-cent move. Clip, clip. And then you're waiting for a retest, and here it comes. That broke out. I definitely would have gone in here on this trade. So if it's breaking a level above the breakout on a new candle right there, I would have gone in. So I would have gone in right at the breakout, 229.08. That's what it's saying. Okay, so it possibly could have been a bad trade right here. I don't think I would have even taken that trade, and the same with this one. But now that it's retesting after a green, I would have absolutely snagged this one. So even if you had some missteps in here, you're not down much because you're going to get out right away if it's wrong. And now you're into this. And if you held through the whole thing, well, now you're into this. So either way, you're into the breakout, right? Most likely, this is where you would have taken your trade. So 229.08, you could have got out at the first. The strategy says get out at the first level, the $50 level. Now there is more. Sorry, guys, I forgot that I had this off for my morning trading. A little bit of the jazz there. So you have other levels to mark that aren't here, not these original support and resistance levels. You mark them on a 5-minute chart, and you mark historical data that call the trades out. So again, I will go over that in more detail. I just wanted to show you a different strategy. So if you waited for a breakout and you went in, then you start taking your choices when to go out. If I'm already banked a whole bunch of, I'm already not banked, but I'm already plus a whole bunch of money, so I'm going to hold it. I'm going to hold a little while. Oh, I'm still plus a whole bunch of money. I'm going to hold it. I'm all the way up here. This scared me because it didn't hit the fib, and that would have scared me, right? And then as it was doing this, and it banked off that and closed, probably here I would have got out, knowing that it's done. So somewhere in this, even if I just got to that level, 229.95, and I picked it up at the breakout to 229.11, right? So I'm making 84 cents, right? I made 84 cents on whatever many shares. Even if you just had 100 shares, $84. Now at this time in the market, this would have absolutely picked up your trade. Even if you had 1,000 shares, it would have picked it up. That's a lot of money, but I'm just saying there's so many people trading right here. You can see from these levels here how high the volume was compared to what the pre-market was. So I'm just trying to show you what happens here, and then how it drops down as it goes on. See how as we go on it drops. But there's a lot of market, that wasn't the greatest example to show you, but there's a lot of volume right here. Thinkorswim's pretty good about filling too. You can see this candle's off the charts, and then it fell down. But you're not going to trade 1,000 shares. You're going to trade 100, maybe 200 or 300, maybe 500. But there you go. Boom. open strategy works for you, right? So if you looked at the next open strategy, number 2, again, it's getting kind of confusing here with all these lines, but that's based on the last 30-minute chart, last 30-minute candle before the 9:31. So that's this one here. So you would move these lines down. So let's look at the open of this candle is 228.96. I'm just going to move that to 228.96. Keep in mind, guys, this is Apple. This is not a huge, you're not getting huge breakout moves, but yet I'm showing you how you make money on this. You can make money, and you start off your day with a couple $100 on a simple trade based on a simple strategy. You don't need to search forever for a stock. You just grab a large cap, and if you want to put the volatility meter on it, you can do it, but mark the high and low of how it says to do it of the candle, a particular strategy you're doing. So this one closed at 228.72. Oops, what am I doing? I'm going to have to go soon here, so let me just get to realize it's 72. So now I've marked this 30-minute, which is the one before the market open. It closed at 9 o'clock, 8:30 to 9, right? Now let's get a look at the 1-minute chart again and see what does that look like here for breakout. So on this one here, you would have had this, but it would have opened down here. So this, you can't trade a green candle below the low. So there's no trade here. Same, this one's close. You might have had a trade here. Again, you can't trade in between. You could have had a little trade there, got off at the fib. This one started, it opened red, so you wouldn't have been able to take that trade. Same with that. You can't trade a red candle above the breakout high. You can't trade a green candle below the breakout low. It's for your protection. As you can see, it protected you, right? And then you get your real breakout, even if you only caught it here. There we go. It's the same move, right? 29.02 all the way up here to this 29. So this one's even more money. Even if you had some false starts in here, you're probably a couple $100 up. So that's the second strategy on Apple, a very slow moving dinosaur of a stock. The open strategy worked. Now we'll go on to number 3 and take a look at it. So number 3 would be on the 5-minute. So number 3, you look for the first 5-minute to close. So that's this candle right here, right? So we're going to do the open of that candle is 228.21. So let me get into this. 228.21. We're just kind of moving these around. Trading the Holy Grail on this is quite interesting too. If you get the companion book, and then this is that was the open, right? That's what I did for the open, 228.21. Yeah. Then the close is 228.78. Okay, 228.78. 28. Oops. We have a very, very tight breakout range here. Got tighter on the 5-minute. So we can't look, you can see right there, oh, we'll go in there. But you can trade these on a 5-minute, but it's designed to trade on a 1-minute. So now we go back to the 1-minute. You can't count the first 5 candles. 1, 2, 3, 4, 5. We're right here. Here's where you are. You're breaking out here on the on the 6th candle. Yeah, this is the 6th candle. So you would have got in somewhere here, breaking that range, 228.84. Basically, they're all going to come out the same way because it's the same stock. I mean, this one you could have even made more money, believe it or not, because you're a little bit lower on this. So they're all going to come out good. I'm just, it did break out, and you'll find that most large caps will break out one way or the other. That's why large caps are very good for the open strategy. Sometimes they don't. So you want to use that volatility, which is taking your ATR level. I'm getting too complicated here, but you want to look at your ATR level on a stock, and you want to, how low is Apple? Is it that low? 4.30, so it would have been $2 or $4.03. So it would have been $2.02 that you would have added and subtracted from this close. So you should watch the RV strategy, how to do the ATR levels and stuff. I'll go over that a bit more for the open and RV strategy. But what you do is once you set your ATR range, and I know I'm losing your beginners, so you should watch some of those other videos, you would divide by the breakout range, and you get a percentage, and you're looking for something like 25%, 20%, 15%, 10% or better. The lower the better chance it breaks out. And that really helps you pick the stock if you're trying to decide on your scanner. You have to mark them, unfortunately. In the 5 minute, you don't know. You might have to guess a bit at the breakout range if you're trying to pick the stock ahead of time. But usually you don't need to even use the volatility rating. It's just there because when they were beta testing, a lot of people were having some trouble with that. But I'll go into more detail about that. But anyway, guys, the moral of this story, the point of this whole thing is it's not hard if you just use basic strategies, find support and resistance levels, use some indicators and tools, and then call out the moves based on those. Keep your share size low. Trade in the simulator first to make sure it's working and you really got it 30 days, 60 days or more. And then have a maximum loss per trade and a maximum loss per day. Right? So that's what you have to do. I can't say that enough. That is the difference between a successful trader and a non-successful trader when they don't follow a trading plan. And then from there, the little other points are learning the support and resistance, learning the tools, learning the indicators, slowly but surely. So day trading volume 1 through 4, I highly recommend. Trading in the Zone, Best Loser Wins if you want reading material. There's tons of great videos here, or you could just be searching for stuff online. Those other people that aren't as cool as the professor. All right, guys, thanks for watching. Remember, always stay inquisitive and go green out there, and I will see you soon.